Today, Sam Bankman-Fried's legal drama continues in the Bahamas. Grayscale explores options to return some capital if the SEC refuses to approve its spot Bitcoin ETF. And Brent Xu of Umee discusses the future of DeFi post-FTX collapse. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto prices in the green today, reversing course from yesterday. As of noon Eastern, Bitcoin remained below the $17,000 level for a third day in a row. Ethereum rose above the $1,200 threshold, and the Matic token inched higher to around 80 cents. Okay, let's talk about the top stories. Court was back in session in the Bahamas after what was considered a pretty confusing hearing yesterday. SBF was widely expected to waive extradition, but that didn't happen. Instead, there appeared to be a disconnect between his Bahamian and American legal teams. The hearing was scheduled so that Bankman-Fried could accept extradition, but as we told you yesterday, his lawyers said that he first wanted to see the indictment against him before making a decision. His local attorney reportedly told Reuters and local news outlets that his client had agreed to extradition voluntarily, defying the strongest possible legal advice. A source tells CNBC that SBF is expected to accept extradition. The former FTX CEO would then be flown to the U.S. for a bail hearing. Now remember, SBF was denied bail in the Bahamas last week. His U.S. attorneys declined to comment to CNBC. The former billionaire was indicted last week, facing federal fraud charges as well as civil suits from both the SEC and the CFTC. There's also a bankruptcy hearing going on today, with FTX saying in a filing that a number of parties have shown some willingness to potentially return money to customers. Next, BlockFi has asked a U.S. court to allow for customer withdrawals that are locked up on the bankrupt crypto lender. That's according to CoinDesk, which cited a motion filed yesterday with the U.S. Bankruptcy Court for the District of New Jersey. The outlet reported that crypto held in BlockFi wallets belongs to customers, and the company has, quote, no legal or equitable interest in funds that were frozen when the platform stopped operating last month. In a statement sent to us, a BlockFi spokesperson confirmed the company requested authority from the U.S. Bankruptcy Court to allow clients to withdraw digital assets that are held in their BlockFi wallet accounts. BlockFi is one of the first companies to fall victim to the contagion caused by the fall of FTX last month and filed for bankruptcy on November 28th, less than 1 month after halting withdrawals. Last, Grayscale is exploring ways to return some capital of its spot Bitcoin ETF to shareholders if the SEC refuses to approve it. That's according to this investor letter, which noted that one option includes a tender offer for up to 20% of outstanding shares of the Grayscale Bitcoin Trust, which are currently trading at a nearly 50% discount to the price of its underlying asset. Now, Grayscale faced pushback several times in its effort to convert its Bitcoin Trust into an ETF, with CoinDesk reporting that the SEC cites a lack of regulatory oversight for its decision. In June, Grayscale sued the SEC over its rejection of the company's application to turn the largest Bitcoin fund into a spot ETF. All right, on to our main story. The fall of FTX put centralized exchanges in the hot seat and led some to prop up DeFi as the future for crypto. Crypto World's Jordan Smith spoke to Brent Xu of Umee to find out how DeFi protocols weathered the 2022 bear market and what to watch out for in 2023.
Okay, so let's start with a look back for 2022 in the DeFi space. What did adoption look like for the industry? What did sentiment for investors look like? How have things shifted this year?
So I think the key to understanding DeFi is definitely the anti-fragility aspect of DeFi. So, in the first half of the year, there was still a lot of excitement. In the second half of the year, we saw a lot of implosions, a lot of bad situations in DeFi as well as CeFi, basically due to current economic conditions such as rising inflation as well as increasing interest rates. We saw that a lot of DeFi protocols suffered with liquidity squeezes. We saw this with Luna that eventually led to the collapse of the whole Terra ecosystem. And then this coincided with the situation of BlockFi, Celsius, Nexovolt, Voyager, and how these correlated with Therios Capital. And eventually we saw things capitulate with the FTX collapse and bankruptcy. What this all goes to show is that DeFi is anti-fragile. DeFi needs time to evolve and develop and basically learn from all of these mistakes that we saw this year to figure out how we can build a better DeFi future going into 2023 and for future cycles to come.
at the same time that these events were happening in the centralized finance arena, we also had a huge number of hacks in DeFi this year. I think it's one of the biggest concerns for people who are looking to use the technology. What does the state of safety look like for these DeFi protocols, and what's being done to sort of fix some of those issues or concerns?
It all comes down to safety when it comes to DeFi. So it's a double-edged sword. On one aspect, everything is open source, everything is decentralized, everything is built on an open platform, open finance ecosystem. So that's a positive. The problem is that a lot of protocols in the past 2 years took advantage of a lot of the marketing, a lot of the hype affiliated with this technology, and they created nefarious protocols in the DeFi space. Going forward, the goal of DeFi protocols should be to learn from all of these lessons, to implement proper auditing of code, and also to implement the proper oracles. So basically, oracles that can indicate proof of reserves affiliated with DeFi protocols, and just have the right amount of auditability related to all the code to ensure that 1+1 will always equal 2 in these protocols. That's the basis for making sure these DeFi systems are safe. And I think the lessons of the past will only strengthen the development of the future when it comes to the future outlook of this technology.
So let's pivot to 2023. Looking ahead, what are some of the trends in the DeFi space that you think people should be watching? What are some of the risks ahead? Give us your take on what people should be watching next year.
There are several major DeFi protocols out there that are going to showcase new use cases. I think Compound and Aave have demonstrated just solid foundations in the borrowing and lending space. I think MakerDAO has also shown tremendous resilience in building real-world use cases, implementing things such as treasury markets and their broader strategies, as well as keeping an eye on the Uniswaps and the Curves of the world. These are very powerful protocols that have very solid development timelines. And on my end, I'm building Umee. Umee is also replicating a lot of aspects of the debt capital markets. And we're taking a page out of the playbook from a lot of these other protocols and just figuring out the right ways to implement them in a self-sovereign chain ecosystem. So a lot of good development to come, and we're looking forward to supporting it. The biggest problem affiliated with FTX, BlockFi, Celsius, Three Arrows Capital, Nexo, a lot of these protocols is the fact that they had bad borrowing and lending practices. They had bad debt, they had bad leverage, and effectively, they weren't able to properly manage risk when it came to accessing the debt capital markets affiliated with their assets. The biggest innovation that's going to come in 2023 is an ability to replicate better foundations to the debt capital markets. Right now, when folks are doing centralized borrowing and lending, it's very similar to trying to build a house without having the proper foundation. But going into 2023, I'm expecting to see a lot of great tools in the borrowing and lending space, such as building a yield curve in crypto, building a term structure of interest rates, activating a repo market, instantiating different forms of credit systems, and overall building a market that broader institutions will be able to look at and say, this is familiar. We know what this is, and we know how to implement this, and this is the proper way to use crypto.
So I want to talk about that actually, because I think there are a lot of promises being made in crypto right now. I think we've seen the issues with promising too much in the crypto space. Can you give me an idea of how realistic some of these goals that you're talking about next year are? And how do you achieve them in a space where there is no central entity to sort of move adoption along or incentivize people to take up some of these new technologies that you're talking about?
So I think people tend to overestimate what can be done in 10 years, or overestimate what can be done in 2 years, but underestimate what can be done in 10 years. What this means is that when it comes to development of a lot of these protocols, they take time. And we saw a lot of hype cycles this last few sessions. Keep in mind, there's many types of bubbles. There was the internet bubble, there's the web 2.0 bubble, there's the metaverse bubble, and these bubbles pop. But the fact that these bubbles pop doesn't mean that the thesis was not correct. It just means that a lot of the development was too early. A lot of the code couldn't have been shipped fast enough, and a lot of folks cut corners when it came to developing a lot of this technology. And so I think the key to having the right solid foundations, as I discussed earlier, is being able to build in a gradual process, being able to audit code, being able to take the best development processes. Think about it this way: Amazon took 20 years to develop before it obtained certain levels of scale that were able to satisfy the entire world today. I think DeFi and crypto will also need that type of timeline before building out the robust infrastructure necessary for broad scale adoption.
Okay, that's all for Crypto World today, but we will be back again tomorrow, so we'll see you then.